Hi everyone, my name is Vanessa Gonzalez Garcia, and this is my goal over project titled Financial Literacy for Latinos. And in today's video, I'll be covering the bank accounts and credit cards presentation in English. So if you want the Spanish version, you can check that out in a separate video. So let's get started. So a brief introduction. As you know, my name is Vanessa, and I go to Centennial High School in Maryland, and I am in 12th grade. And so I moved here from Mexico to the United States 8 years ago. And growing up here, I realized there was a lack of resources in both Spanish and English, specifically on financial literacy. So I want to provide a resource for those who are like me and want something to learn from that's both in English and Spanish. So before we begin the video, as a little disclaimer that this presentation is for educational purposes only, and I am not certified in finance, but this is just for people to learn and grow. So, a question for thought before we begin is how do you currently save or spend money? And I know there's a lot of ways people can spend money. They can spend it through their credit card or through their cash. And people also save money through piggy banks or they just put it aside in like a drawer. But these are just different ways people can do that. And you guys probably think of other ways you can do it on your house. And so in this presentation, what we'll discuss is firstly, the types of banks, accounts, and credit cards that there are. And then secondly, we're going to discuss like the benefits of these types of bank accounts and their credit cards. And thirdly, we're going to go into the steps of opening an account. And there's an asterisk next to it because we are only going to go over one type of account. So not a credit card, only the other type of account. And fourthly, there's a Loteria activity to end this video, and it's very fun. So you guys should stick to the end and check it out. So first, like I mentioned, we're going to go into different bank accounts and credit cards that there are. So to start off with some vocabulary, first is deposit, and that is just putting money into a bank account, and then withdraw, which is just taking money out of a bank account. And as you can see, I put a picture for deposit of a little like coin going into a box because you're putting money somewhere. And in withdraw, I put someone having money because when you take money out, you have it in your hand or something like that. So yeah. And then we're going to go into what even is a bank account. So a bank account is a service offered by a financial institution that allows people to either store money, and you can deposit and withdraw money. And they can also do other transactions such as money transfers through Zelle or PayPal. But that is what a bank account is. And there are two types of bank accounts that we're going to go over. First is a savings account, and then there's a checking account, or also known as like the debit card. So, and before we get started, we're going to see this video on what interest is because it plays both into our savings account and our credit card later on. So let's watch. What are interest rates? Presented by WallStreetSurvivor.com. Interest rate is a fee paid by someone who borrows money to the person he borrows it from, and an interest rate is the amount that borrower pays. Here's Ben. Ben just graduated from high school and was accepted into a top university. That sounds great, right? The only problem is the tuition is too much for him and his parents to bear. So Ben and his folks head over to the bank to borrow money for school. Ben talks to the banker and gets a loan for $50,000 to pay for his education. But why? Why would the bank do this? That's a nice guy and all, but what's the benefit in their lending them out the money? The answer is interest rates. In exchange for the $50,000 loan, the bank will charge Ben 5% interest each year until the loan is repaid. So each year, Ben will pay the bank $2,500 in interest. Interest is almost like paying rent on the money you're borrowing. Here's another scenario. Imagine Ben has saved up $10,000 that he keeps in the savings account at the bank. By keeping his cash there, he's actually lending his money to the bank. The bank can then use the money for investing or to lend to other people. Just like the bank charges Ben an interest rate for the money he borrowed for the university, the bank pays Ben an interest rate in exchange for keeping his money with them. So, yeah, as you can see, interest goes into savings accounts. And so, what is a savings account? It's used to store money for the future. And, like in the example, I mean, common way people use savings accounts is to store money for college. It does a small amount of interest. So, like the video mentioned, you're getting a little bit of money back just for having your money in the account. But there is a limited number of withdrawals per month. So, that is something that it goes into it. Then we have a checking account, which also, like I said, debit card or something like that. And it's used for daily spending, such as buying groceries or paying bills. And money is withdrawn instantly when you make a transaction, like for example, when you use your debit card, but checks are not instant because there is an option to use checks for a checking account. And this does take time because the bank has to process your check because it's not online or anything. So I put a grocery bag for, to emphasize the daily spending, and a clock to emphasize that part of the checking account is checks, but checks are not instant. And so then we're going to go into the credit card, which is not a bank account, as many people might think. And this is because I like to bring up an analogy, that is a library book and your own book. So in a library, you can borrow a book and you have to obviously eventually return it. You can read it, like have some time with it, but you eventually have to return it. But with your own book, you can obviously just read it as long as you want, do whatever you want with it. You tear it up even if you want. So in this example, a debit card would be something that's your money. So it would be like your own book because it's your money, you can do whatever you want with it. But a credit card is not your money, it's money that the bank is letting you have, and you promise to pay it back, just like the library book, you promise to return the library book, or you get obviously like late fees, or they don't allow you to borrow books anymore. So that is the main difference between credit card and why it's not an account because it's not yours, and a checking account. And so for credit cards, the main reason why they're very popular is credit score. And this video will explain what a credit score is. So let's watch. A credit score is basically a number that tells institutions such as banks how creditworthy you are. For example, a bank will look at your credit score when deciding whether or not they approve a loan or when deciding how much interest they'll charge you. The better your credit score is, the more willing lenders will be to give you money, and the lower the interest rates they'll charge you will be. Credit scores aren't just used by banks, though. They're used by lots of entities, from insurance companies to landlords to even the government. Credit scores are calculated based on information gathered from multiple sources, but mainly based on your credit report, which is a record of your credit history. The credit report contains information from lending institutions, collection agencies, and even the government. For example, if you paid back previous loans on time, your credit report will reflect that. Based on this information, your credit score is calculated through an algorithm which varies from country to country, as well as from institution to institution. And do keep in mind that a lot of countries don't even have a credit score system. In the United States, your credit score is mostly calculated based on the credit report information from the top three bureaus: Equifax, Experian, and TransUnion. These three operate the annual creditreport.com website, through which Americans can request up to 3 free credit reports per year, one from each bureau. This is because the Fair and Accurate Credit Transaction Act gives U.S. citizens the right to receive information for free of charge. But remember, you will receive credit reports and not credit scores. So yeah, that's very important as U.S. citizens. I know many people don't know that. So that is an overview of credit scores. And this is the FICO credit score range, which is one of the most popular types of credit score algorithms out there. So as you can see, it ranges and it's not like one range. There's not like a huge one range. There's many different ones. And obviously you want to be near the exceptional or good to have those good interest rates and to have the ability to get those loans out. And so we're going to go into what a credit card is. So a credit card allows you to borrow money to make large purchases. One of these is like a house. And you must always pay it back, and always if with interest if unpaid. So whatever you have to pay back, there will be added interest on top of it. And obviously, it does help build your credit history. And so here I put money because usually people use their credit cards to make transactions that include a lot of money. And like put the credit score range. So because this helps you build your credit history. And if you have any questions by this point, you can put them down in the comments below, and I'll do my best to answer them. So let's move on to the benefits and cost of the accounts we went over and to the credit card. So before we begin and before we go into the cost and benefits, there's another question for thought of why does this matter? Why do the accounts matter? Why do they have their own different things? And just so you guys think about what might be the drawbacks and, like I said, benefits of these different types of accounts. And so first we begin with the savings account. Some of the benefits is that it does keep your money safe and separate from daily spending. And it encourages financial discipline as you can't go into the account every single day. And it earns interest over time. This is the main benefit of the savings account because you do earn some money back while you have your money stored. But the costs are that it may have a minimum balance requirement. So if you don't have enough money to even start the account, you're not going to have one at all, which is a drawback. And it's not ideal for everyday use, obviously, because you're trying to save money, not spend it. So you wouldn't get a savings account to spend the money in that account. And then let's go into the checking account. So the benefit is that there is no interest or debt for this account since it's just your money. There's no way you can be getting like interest. And it's easy to track spending and manage your budget with these types of accounts because it's mainly the account you have a report where you can see what each transaction and how much money you spent and where you spent it. So it's easy to track, especially for budgeting. It's a really good type of account. And for the cost of the checking account is that there is a risk of overdraft fees if you spend more than your balance, and it does not build your credit history because since it's not a credit card, you're not borrowing from anyone for your debit card. So it doesn't build it, which, if you want to build your credit score, this isn't helping you. But, and also, I know from a lot of people from the Latino community, if we're trying to send money for relatives or for anything in another country, it can have ATM or foreign transaction fees. So that is something to keep in mind. And lastly, let's go into the credit card. So the benefits is one of the main ones that people incentivizes them to get a credit card is that it can earn rewards or cash back. And additionally, it's useful for emergencies or large purchases, such as if you have an emergency accident, like you broke your leg and you're not like at your house or your home state, you can use your credit card to just buy the ER expenses there. And later on, when you go back, you can pay it back. And it does help build a credit history since it is your credit card. But then the cost is that it's easy to overspend and go into debt, as sometimes there are limits to credit card spending, but when the limit is not very large or you might not be aware of it, you can go easily spending more than you can. And also, late payments hurt your credit score. So obviously, you don't want to be spending more than you have and then not paying it back because then your credit score is going to go down and then you won't be able to get those loans and that interest rate that's low and so on. So now, if you have any questions on that, you can also put it in the comments below and I'll try to my best to answer it again. So now into the third step, which is steps to opening an account. And so just the asterisk was that children under 18 cannot open an account alone, and it must be a custodial account with their parents or guardians. And so, like I mentioned in the beginning, we're gonna go over the checking account. And so this I will present in steps, and I will put the step, and I will then also present how I would do the step. So, for example, my first step was to choose your bank and just, all banks have different requirements and guidelines. So that's why you have to research into your bank and go into like what types of debit cards or accounts they have. And so then my example is that for the example, I usually use the Bank of America. And the reason why I chose that is because it offers many resources in Spanish. There's many branches around the nation. So it's accessible. And additionally, there's options for teen accounts. So if there's a bank that I know, like I really want, but there's no options for teen accounts, and you have to cross it off the list and find another one. So this one does have teen accounts, which is why I chose it. And so now the step two will be to research the type of account you want and make sure that you understand the costs and requirements that come with it. So I was looking around to the accounts that Bank of America offered, and then I found the Advantage Safe Balance Banking account, and it's a simple checking account with no overdraft fees and no paper checks. So then I have to keep that in mind that I can't use checks, but it's all digital banking. So there's like no overdraft item fees, and if I'm under 25 years old, there's a monthly maintenance fee of $0. So something that benefits me because I'm not over 25. But like we mentioned way past, there is a minimum requirement of like money. So in this case, it's $25. So I have to keep that in mind. And if I don't have $25 yet, I need to save up to have that money so I can open the account. And for this account, 16 and up can open an account by themselves. But if you're 16 or under, you have to co-own the account with an adult. And so now the third step would be to schedule an appointment and gather the required documents. So many banks do require appointments at their local financial center to open an account, and it's just to have the people meet with the financial specialist or whoever is working at the bank who can help them open the account. And at the appointment, be ready to have the required documents. And we're going to go over that in the next slide. But there are some required documents that go into opening an account. And if you need, you can ask an assistant who speaks for an assistant who speaks Spanish, because I know many families they like their children speak English, but the parents speak Spanish. So you can ask someone, or ask someone who speaks Spanish so they can communicate more easily. And for this example, for the Safe Balance banking account, an appointment is required for those under 13 years of age. So since I'm over 13 years of age, I wouldn't need an adult, but if I was under, I would need it. So I'll have to tell my parents about it. And so now we go into the required documents. So for this example specifically, I would need but in general, these are the documents that are needed. I would need a valid government issued photo ID, which could be a driver's license or a passport. Then I will need a social security number or I ITIN, which is the individual taxpayer identification number. Those is for people who hold visas and not green card holders yet. And then lastly, I would need a proof of US address, and this can be through a utility bill or a lease agreement. Then for the child or teen, you need a birth certificate, the social security number or ITIN, or you can also need the school ID or the form of identification if available. So now the last step is to get your card and use it wisely. So after the appointment, after you bring the documents and then everything is set up, usually your card should be mailed to you once you completed the process. And then make sure when you do have your card and you activate it that you set a safe PIN and track your expenses through the bank's online website or app. In this case, since it was online banking only, you can do it through their app. And be mindful of when you use your account, things can add up. I know most people when they first get their like credit card or debit card, they can be like super like happy and spend it all, but you need to be mindful and remember that your money does go very fast. So yeah, and these are some pictures I put like the lock for the safe pin. I put the card so when you first get it, you can see how it looks like, and then your expenses and how they can kind of add up really fast. And this is just a quick video to reinforce how to keep your debit card or credit card safe. So let's watch. Here's a few debit card safety tips. Tip number 1, strengthen PIN numbers. Your birthday should be easy to remember, right? Same as with the last 4 digits of your phone number, but they still don't make a good PIN. A strong PIN is a random PIN. Tip number 2, sharing isn't always caring. Sharing is good in kindergarten, and usually we agree. But when it comes to your PIN and credit card, don't share with anyone. Tip number 3, protect your PIN. All the important things in life should be kept safe. Make sure you protect your PIN by covering it every time you use it. Make sure you follow these simple steps to ensure your debit card and PIN are protected. So yeah, that's just to reinforce the fact that you want to keep your card safe, and since it is your money, that's something that obviously people need to survive and buy their things. It is very important to keep it safe. So now we're gonna go into, now if you have any questions, you can put in the comments below and I'll do my best to answer it once again. And now finally let's go into the lottery activity. And so let me explain a little bit. So Loteria is a traditional Mexican game where there are pictures, and so there will be many pictures in one little document or card, and then people have like a spinning wheel and they take out little um circles where it says like the picture corresponding to the actual physical card in the document. So what I did to make this kind of imbued into our activity is I put the vocabulary words we used in this presentation into the Loteria board, and then I will provide the spinner wheel in the description so you can spin the wheel, and then once a word pops out, you put your pin. So yeah, this goes over what I kind of just explained. And make sure it's the bank account and credit card history vocabulary because there is another one for the budgeting presentation as well. And remember to click spin. And the words will be in Spanish and English. If you don't know Spanish, then you can like just look for the ones in English. And if you don't know English, you can look for the ones in Spanish. Or if you know both, then perfect. But in this case, you need to connect five words together, five across, five um horizontally. And but you can also do special patterns. I know some people like doing an L, so all of like the words look like an L. And just remember to pay attention as you're spinning the wheel so you don't miss any words. And when you collect and when you when you now make five words together or do the pattern, you can collect your prize. This can be, whatever you want, like bragging rights. But this is just a fun activity to reinforce the vocabulary we learned in this session. So yes, this is the example. As you can see, yeah, you can make the pattern and there is one free space in the middle. And there is 10 variants of this, so you can play with other people. Because if you guys have the same board, then you will win at the same time. But you make sure to use a different version when you play with other people, so you guys have different chances of winning. And so, thank you so much for your time, and I hope you learned something from this. And here's a feedback form. You can scan it through the QR code with your phone and make sure to fill it out with as much or as little as you want. Just anything will help. So thank you so much again for your time. And if you have any additional questions or you have a question that is more private or you don't want to put it in the YouTube comment section, you can always email it to me and I'll respond to you as soon as I can. And yes, thank you so much. Have a good day.